Okay, good. Perfect. There's always a little bit of a delay when, there's going through chat. So just FYI, as soon as I see your comments, I'll start talking, and then there will be a little bit of delay. So perfect. All right, I am moving on. First things first, I'm going to knock out one of the questions that got asked from a recent trade that we had, and then I'm going to get into a whole list of questions that got sent to me and things like that. Just to let you guys know before I kind of get into some of these questions, I'll reiterate it's been really great having all of these questions because it helps me understand how I can better how I can better serve you guys, how I can better make it to where all these trades are more easily understandable, those types of things. Volume seems to be very low. Okay, I can crank that up. Let's see here. So just get things a little bit closer to the mouth. Okay. Hopefully that sounds better and everything is a little bit more clear. And I know I'm definitely getting into technically like the yellow bars here. But anyways, all right. Like I said, they are helping me. So I am going to be making new videos for the entire ADAPT Daily service. I'm going to be breaking apart and explaining how to set up each individual trade, kind of the nuances of each one, and really elaborate on a lot of these details. And the main reason I'm doing that is because there has been, more questions as this has came out, and some more people have joined, and we get skill levels at all different levels, and that's really nice because being a trader that I've done this for many years, I sometimes forget some of the things that I just kind of blow by like they're nothing. Like for an example, how much does strike choice really make when putting on a structure? Like something like that, I know it's not too big of a deal because of course the market moves around. So, but I'll be getting into some of those details in a little bit. First things first, I'm going to go into this trade. This trade is our 730 reef. I got asked to go through, how did I get this execution, whatnot, and so forth. This was crash day, all this stuff. I'm going to go back a couple days because the question that got sent to me was, can you go day by day? Because they didn't see how I was able to get the return that I was able to get. This one, yep, there we go. Okay. Yeah, black screen. Yep, I'm getting it. There's just how it captures that window. It doesn't always grab it right. So, anyways, I got it fixed now. Okay, so in the O&E, so here is my June 30th, and let me get into my entry, which was probably here later in the day, as always. So I'm going to get down here into the afternoon, say 12:30, and my 7. Oh, I entered really late that day. So turn that off. Okay. So here is my relative entry. I entered in at, if I look at my time schedule here, 12:06. And just to let you guys know, on the actual exit day, I exit at 7:35 a.m. is what I booked in here on O&E. As you guys know, in the forum, I was live telling you guys that I was exiting out of these trades. I was very transparent. I even let you guys know pre-market open that I was going to be putting in really high limit orders. So I'm just going to basically reiterate that right now when I go through this step-by-step process of exactly what I did. So that way you guys know how I executed it. I will also show you guys in Thinkorswim my actual orders. So that way you guys can see those. And yeah, and I'll show you for the smaller accounts, because I know that that's been a big thing is like, well, I was using XSP and whatnot. So I'm going to show the small account one that that account is my little Roth account. I think we're up to, yeah, almost 38,000. So we'll show that. As you guys have seen some of my older videos, we were at what, I don't know, 34, 35 a couple months ago. So anyways, let's just move through this. So this is relatively my entry back here at 12:06, so we can go back to the exact time period and we can talk about entry. first things first, we're going to do entry. So let's go 5 minutes. And then trade log, 1206, perfect. So, all right, so here is my actual entry. So I'm going to talk about the entry just really quickly while I go through this because there's been some questions about the entry and how I do this. So just to review here, let me put my strike filter back at 5. When the volatility significantly expanded, I switched over to 10-point strikes. Okay. So first things first is how to set up the reef trade. We're just going to go through that. It's really nice and easy here. The reef trade consists of a butterfly placed at the money. So this is, of course, near the money. This is about 4 minutes later, so the market was probably moving just a little bit. But if I was to set this up from scratch, of course, we'd put our front longs here. We would go down here to our 1 standard deviation. We'd put our back longs down here. And then we would put our shorts in the middle here. If I were to separate these out, here we go. We've got the butterfly that I have placed back there. If I was to show this on a new trade, right? So here's our butterfly. And then really quickly, what we would do here, it's very, 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 very important. I've had a question about this. How do we deal with the calls, whatnot, and so forth? Okay, the calls are not just willy-nilly thrown on there at the money calls. Like this is not what we want to do. Right here we are at 4 delta, so honestly it's not too bad. It's not the worst setup humanly possible. Typically it is near ATM that we do need to put on the call. But as you guys have seen in some crash days and some really, really low volatility days, sometimes we'll be pushed up here into these 40 delta calls. Sometimes we'll be pushed down into 60 delta calls. So we can kind of waver just around a little bit. It is designed to work that way. I'm not going to go into the super details of that, but you can see here we've got 49 delta on 10 butterflies. It is imperative we use 1 call per 10 butterflies in the SPX, right? So if you're doing 10 butterflies in the SPX, you do 1 call. If you're doing 1 butterfly in the SPX, then you would do 1 call on SPY or XSP. As a small reminder here, the SPY does not trade at the exact same strikes or expirations as the XSP. So results are going to vary just a little bit, but you want to get the same delta and roughly the same expiration, right? And if you have to go to an expiration, go to one longer rather than the one that's on it. So if there's not a 14-day, go to the 15-day. And then make sure you got the correct delta. It's not the strike, it's the delta we care about. So here we are, we're at 49. So we're going to come up here to 49. So there's 49.21. So we can either go 49.83 or 48.65. We probably just go for this one. Here's our single call here. And you can see how this setup is a little bit different than what we projected before. We have a little bit better lift back here. It's a little bit better balance. We're slightly OTM on this side instead of right at the money. Just to compare those two, if we were to take this down and put it right here, you can see it sinks out the back. We've got a little bit more expensive of a call. Not going to kill the trade. These are pretty robust trades, but in general, we want to maximize the efficiency of it completely. And there is a balance between these extrinsic values that we're trying to match based on their pricing. That goes back into the options modeling, but it's no big deal. So there's the entry for that. Okay. Now to finish the first question here, go day by day with the reef trade. Okay, so here we are at entry the very next day. The market rallies very significantly, 2.28 to the upside. These reefs can handle this no problem, as you guys have seen. It's perfectly fine up here. This is Wednesday. Here Thursday, I believe we pulled back. Yeah, so here's our big pullback on this day, right? This huge, big bearish engulfing candle, really nasty looking thing. Anyways, didn't even phase us. Not a big deal at all. So here we go. We got these pullback. And then we're going to go to the next day. Now, I'm going to preface. I said this in the forum also, that we were getting some wild, wild variations this day. Probably because we were about to crash the next day. But Anyways, we had all these variations. I was up profit target, I was below profit target, I was kind of all these ways. I'm going to answer that question because there was a question about this along the way. Is how do we determine whether to exit a reef trade when they're bouncing around like this? So in general, right, I prefer to stay in a trade rather than exit a trade. So I'm going to always kind of bias to hanging in the trade if I'm borderline, right? If I'm questioning it, I could probably just stay in the trade and it's fine, right? I'm okay with the risk of taking, if it loses out or something like that. It's not too big of a deal. So that is my preferred method. It's kind of like if you're a golfer, when in doubt, putt it out, right? So just when in doubt, go and make sure that you're looking there. So let's see, Wayne. Okay, hold on. Let me just see. I'm looking through the chat, making sure I don't have anything. Much better. XSP. Wayne and SSPXPY alternative for small accounts. Yes. Yeah. XSP is definitely for small accounts and SPY for small accounts too. But just make sure that you're still using the base structure on the SPX. It's not that there's not edge in the SPY or the XSP if you can get it executed at your broker. I know Schwab is a little bit, testy with XSP execution nowadays, but in general, that is perfectly fine to use. The reason why we want the SPX structure, the main structure, like the butterfly or the calendar, the reason why we want those over at the SPX is because it's going to keep our commissions lower. And if we're only looking for like a 3% profit target or so, that those commissions can be eaten up a little bit on the SPY or XSP. So then alternatively, what you can do is just not execute those very low profit targets that are in those 3% ranges because you don't want to be eating that up with profit targets or with commissions. And you can only, execute other ones. So can you tell us where in the forum you are posting these? I have not seen these. Yeah, if you go directly to the eTrading Edge forum, by the way, if you haven't made a login for the eTrading Edge forum underneath your membership, if you haven't made a login, you have to have a separate login for the forum, and my admin will admit you as long as you have a membership. So keep that in mind. that is over there. And I post them in the Adapt Daily thread. In fact, let me see if I know you got a black screen right now. Give me just a second here. Okay. So if I go over here to my membership here and I go to account and I do my login jazz and I sign in, if I go into the Adapt Daily, which I don't even have on here because I go through everything on the back end, but if I go in here and I go to like the Adapt forum, right, and you go into the forum, there are different categories here. Of course, I have access to all of them, but if you go into the Daily Adapt right down here, and you look in the forum, here is all of our forum stuff. I've been posting on here, everything like that. So this is where I posted everything. I said, welcome to crash day. So let's go look at that forum really quick. So 2 days ago, this was before the market open, and I said, welcome to crash day. I said, be very slow and careful with executions today. We can get great pricing if we are slow. If the calls are anytime maxed out, I will be leaving the calls on. I'll be talking about this in just a second when I get to the crash day. But basically, I was saying exactly when all of this stuff, look, I was able to close out both the 730 and the 8-1 reef trade, blah, 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 right? I have a fishing order on the 8-2 with the butterfly for max gain. So we'll see. Boom, the 8-2 closed out. So, I mean, you can see I went through this whole thing. I even posted them that, hey, this is where I just got exited. I posted all my stuff. I don't normally do that, But I really wanted to be very transparent with everyone because it was a crash day and I treat crash days very differently. If I have the ability to, if I'm really busy on a crash day, it is what it is, but I happen to be by the computer. So let me get back to O&E and then we'll pick it up from there. Okay, so here we are back at O&E, and so this day was all fluctuating like crazy. If you generally average the pricing that you're getting, like as you're just getting quoted in, you sit here and watch it for 20 minutes or so, right? We should be able to give ourselves about 20 to 30 minutes to execute these trades. If you're a smaller account, and what I mean by a smaller account is anything under probably 200,000, you're a pretty small account. You don't need to execute, hundreds of butterflies at once. So it's pretty easy to execute things. You can kind of shove them into the market. If you're above that, then reach out to me. We can talk about something different because execution starts to get pretty crazy when you get up into about 2 to 5 million. But if you're that kind of a client, just reach out to me. We'll talk on a one-on-one basis. As far as your normal accounts, though, as we're sitting here floating around, I had enough of these above the 4% limit that I was like, yeah, we'll just leave it on. We're okay, right? Here, this one was slightly over. If we click minute by minute, right, here's slightly under 4.6. Here's slightly over. So you can see we were just getting a nice fluctuation around that. It looked like a crazy day, and we had a decent amount of range. So I was like, you know what? I'll leave it on. It's no big deal, and then we'll just move on. Now, what I'm going to do is I'm going to click forward to all the way to the open, and what you're going to see is the crash was a gap in the morning. Now, these butterflies, just as a little bit of advanced, option pricing, these butterflies are long puts back here, predominantly more so than above the market and then up here, right? So wherever the market moves, if at the money pricing on the puts explode in value dramatically, when the market gets back here, this T+0 line will actually not be an accurate representation of what your pricing is going to be. You will actually get pricing far above the value of your butterfly. Now, this only happens if there is a massive spike in volatility, right? It really does have to be a crash type of situation. And in that case, you need to take advantage of it if you want to get, the type of execution I got. I want to be 100% clear here, though. I was fully expecting to see this down 10% or maybe even 15%, and I was totally okay with it. I wouldn't have even been shocked, right? It would have been well within parameters for the entire ADAPT Daily system. We wouldn't have even been close to our maximum drawdown because each one of these trades have only a certain amount of allocation to them. Wouldn't have bothered me in the least, right? So I want to be very clear with that. I was fully expecting to close these trades out for this much unless what happened. So I'm going to jump over here to the next morning. And here is crash open, okay? Now, you're going to see the pricing is way up there at 16, and you're way down beneath the market. And you're like, man, are those things real, right? You're like, man, are those things real? And normally, if I see these in Backtrader and in O&E, I'm like, no, they're total bullshit. They're not going to be able to execute. I'm not going to be able to fill that at all whatsoever. So I normally don't anticipate them to be real when we are doing any kind of synthetic testing in Backtrader or anything like that. But what I will say, what I do is I will basically model completely losing the call, right? You can see back here, this call is almost out of every speck of juice that it has. It's almost lost all of its value back here. So it's worthless to me at this point. I don't even care about the execution of the call whatsoever. The only thing I care about at this point, because the call is worthless, is the butterfly execution. So what I'm going to do at this point, and why did all my dots go away? That was kind of strange. Here, maybe if I go 5 minutes. Yeah, my dots are back. Okay, so now you're going to get 30%. Like, so no, to be fair, 100%, I did not get 30% on this execution. I am aware that some of you guys probably on this call, and throw it in chat if you did, but a lot of people did outperform my execution on this. And so I'm just going to explain how I did it and where I put things, because I didn't want to push the execution. And of course, I'm not going to sit there and post all of you guys that I got some sort of super amazing return on this, and no one would have been able to even try to get close to my execution. So anyways, let's keep going through this. Where is my trades? There we go. All right, so as we click through here, 5 minutes, you can see that predominantly these prices stay up here on the high end all morning long. So I got executed. I'm looking over at my broker right now, account statement. I will show you guys this in just a second here. Let me see if I can just pull this over. And I just got to change this window. Why I can't show that. I should have been able to show that window. I should be able to show my toss over here, but it's not giving me an option to show that window. Maybe if I do a window here, give me a second. Okay. What I can do is I can basically just do this. Let me see here. You guys are going to see all the jazz here. Let's see if I can. Well, here, you know what? Let me just do this. I'll log off of toss really quick, and then I'll log back on and see if it can show the window. It's kind of weird. I'm using OBS to capture the windows so that I can show them to you guys, but we'll see in just a second. Until then, let me keep going. So like I said, I am completely ignoring the call whatsoever. I don't even care about the value of the call. I don't care what it's quoting. Nothing. The only thing I care about is the butterfly back here. So what you do is we put in a butterfly order, right? So we put in a selling butterfly order. So here's our selling butterfly order, and I'm going to combine these. And you can see here, all that's left is this long call back here, right? So what I'm looking for is when I put in the sell order, I'm saying, okay, what's my credit that I'm going to get on this at the end of the day, right? If I execute this at whatever price. And if I'm putting in a fishing order, right? That's what I was explaining as a fishing order. I'm going to sit there and say, okay, that's going to net me out, say, $2,000 in profit. Okay, if that's going to set me out $2,000 in profit, that's, sure, that's a nice and reasonable thing. I'm going to just throw it out there and let it fill. And normally what I'll do is I'll go slightly above my profit target and I'll just be happy with what it fills at. Or if I'm kind of nervous, which one of my trades I was nervous on, and that was, I think, a 1% loss on that, is if the market's way down here and I know on a reasonable T+0 line, seeing it from yesterday to today on this crash day, that I should be down a decent amount of money, and I'm seeing some quotes down there, I'll just throw it up there for kind of like a break even, which is what I did on the first order of the day, which was on the 7, the other butterfly. Hold on, I'm logging back in. So yeah, fishing order. I leave the call out there. We don't care about the call. The call is pretty much worthless at this point. I mean, yes, there's like a little bit, maybe like $100 or so, in here left. Basically, you put out this order and you just throw it out there, and you put out a limit order, and then you just let it sit out there. There's so much craziness going on in these crashes And there's so much fluctuation that you just throw it out there. And if someone takes it, sweet. You move on with your life, right? Like it's just how it was. That's exactly what I did for the 7:30 trade. And you can see here all morning long, right? We were quoting 6, 7, there's a 1, there's a 30, there's a 16, right? All this open, and I was like, "Holy crap, if we can lock in these prices, which is what was being quoted on toss, I'm going to try to take it." And that's exactly what I did. So I did the exact same thing with this trade and the I'll show that up, the 8-2 reef trade. Man, did I close that out already? Uh, yeah, here's the 8-2 reef trade. And let me clear. So here's my 8-2 reef trade. This is, you can see here fluctuating all morning. Let me go back to, I mean, look how crazy this was. I mean, the things were just fluctuating around wildly, but I closed them out. As I showed here in the forum, let's see, I even posted, oh, it doesn't tell me the exact time, but I'll pull them up and toss. See if I can share this screen now. It doesn't actually let me pull that over. So is what it is. What I can do here is, because I did want to show some toss today. So either way, I'll have to do a screen capture. And we're going to see if this kind of freaks everything out. But I got to change my projection to my second screen. So give me just a second here. Live problems, right? Live problems. Play settings. And freak everything out. Okay. That I'm going to throw down here. Delays. Okay, now let me open up toss and okay. You guys should be seeing my full display. You should see my toss here. Like I said, go. Okay, so here are all of my executions here, and on the crash day, which was crash day was the 5th. So you can see here I closed out of all of these on here you go. So the 5th, 632, 633. You can see all I did was just sell just the butterflies, right? 649 here. 21.95. You can see, I mean, just a crazy price for this thing, right? 21.95. Like, holy crap! I bought that thing for like $13, right? We can go back to the 8.5, so 8.16 trades. You can see here, yeah. Look at this. We bought this thing for $13.60, right? And it exploded up to $21.95. So, anyways, great fills. Like I said, I just throw them out there and you just leave them, right? This is that small account just to kind of prove it right here, 37,906, right? It's just one of my small Roths. So there you go. And you can see all my other orders that we've been filling in. And then, so what I did here is you can see how delayed this was, right? We put this in at 649, and then the market was rallying there for like a solid amount of time. And so you can see I had my calls out there for just some like random price, way up here. You can see here, 69.84, right? And eventually they end up filling, right? So they filled way up here. at decent prices for the exact move that we had. So, anyways, just to give you guys a clue on how I executed that day, how it went down. Now I should just be able to crush out a lot of questions, and it shouldn't be too complicated from here. All right. So one by one here, we're going to be going through all these questions. So I would like to understand more how to easier place reef trades when there is no clear 10-to-1 ratio on flies to calls. Is it necessary a small account? But for example, if the allocation is 20%, I need to place 16 SPX flies. What do I do with the calls in this case? So if we need 16 SPX flies, then we need at a minimum of one SPX call, and then you can just go grab 6 XSP calls or 6 SPY calls and still get your 16 SPX flies on, right? So that's how I do it. That's how I've done it before, and it works out just fine. As far as how can we better track the P&L so that we can take profits, exits on a loss, it seems like they fluctuate a lot. So if you're using XSP, specifically if you're using XSP here, then XSP calls kind of go wild sometimes. And I say wild, they just get some random quotes, right? So watch yourself with that execution. They get really wild. SPY doesn't do that as much because it's an American style option. So you won't have those fluctuations as much. But still, no matter what, the butterfly will fluctuate around. I believe I answered this just briefly a little bit ago, which is it's imperative to watch the average price that you're getting quoted, right? If you're getting quoted below loss target over and over and over, and you've sat there and watched it for 20 minutes or 30 minutes or something like that, then you're basically probably at a loss and you should just exit. If you're getting constantly quoted above profit target, then you pull that execution and you try to grab that profit target, right, using your spreads. A little fun fact for you, I know Schwab over here, if you make which I'll show you guys this really quick. If you make a custom order, so let's just randomly put this in, but we'll basically do, so we'll just put something random here. So we'll buy this. I'm holding control right now, by the way. We'll sell 2 of these and then we'll buy 1 of these. So you can see I made a butterfly down here, but then I'm going to buy a random call. So let's go buy a random call. I'm still holding control. Boom. It turns this into a custom, right? And you just want to know which call you had. So you can reduce this guy down to say 1. And you can see over here, we created a structure. And this is all on XSP, but I was just kind of showing this, right? Ooh, I might have gotten that backwards. Let's see. So yeah. So buy, sell, buy. There we go. So you can see I basically just kind of created this custom order just instantaneously. I wasn't quite even on that, so of course we can adjust it. Let me pull those 520 back. Boom. So you can see here, I just made a reef trade with just holding control down, grabbing the options that I wanted. Boom, I got them together. And I was shocked, right, when I discovered this, but you can actually right click this and confirm and send, right, and send it over here, and it will, they'll actually take it, right? Schwab will execute it at not too bad of a price. Honestly, I've been shocked because I threw it out there just to see if I could get it executed and say, hey, will they take it, right? Of course, that only works if you're doing it all in one asset, so XSP or SPX. But especially if you're doing surf trades or if you're big enough to have all SPX and things like that, it's really easy. So I like that. As long as it's only got 4 legs, you're doing okay. If you're doing I don't think we have anything more than 4 legs here. But they took them for the Makos, right? They took them for all that kind of stuff. I know the Compass trade, but that was an older trade. I don't think that's part of this. So anyways, yeah, they will take it for this. So hands down, there you go. Let me open up and see if I have any. Yes, my long call got crushed too. I did get it filled, my fishing order for the flies, but I didn't make the overall trade profitable. Okay, so yeah, it depends on when your execution was. It does look like what happened was in the morning in the middle of the crash. That is when all of the really good pricing kicked in. And that's exactly when I talked about that. So can someone tell me what a fishing order is? Yeah, Tim. So a fishing order, yet again, you just put it out there at a limit order, right? You put a whole spread out there for a limit order. You just if I were to come down here and I were to go and set this at a limit order. So see, this is how this is unlocked and toss. You can set this at some sort of limit order. When you right click, confirm, and send, it'll be a limit order, right? And then once it's a limit order, you can see here, you just send it out there. But if I was going to try, so let's see here. Let me just show this. Portfolio beta weighted. I'm just going to grab one of our structures right now. So boom, boom, boom. And two. Okay. So you can see here is an SPX structure, and then we're going to grab, that's the 19th. So let's grab the 19th down here. Boom. So this is one of our orders right here, right? If I were going to try to close this, right, then I want to go, so I'd hit control, I'd highlight our butterfly up here. I'd go analyze closing trade. There's that. And then I would right click down here, analyze closing trade. There's that. So right now, as you know, bid asks went nuts after market. They always do. So ignore this. Like you would never want to try to fill this, but it's probably coming from the XSP call. Yeah, just random things. But anyways, you can see here our profit right now is 830, which is total bogus. It's not that at all. So then what you can do here is you can watch these quoting because they'll quote live, right? What is a general filled order, right? What's our credit, right? You'll see these kind of fluctuate. And let's just say that they're fluctuating. Um, let's just say that they're fluctuating around like, I don't know, 25.0. Let's say 25. Sure. So we'll just keep cranking this up. We'll go to 26. So let's say we're just trying to capture just whatever this is right here, right? And this is locked in, so we can right click this, confirm and send this, right? And send it as a limit order. And if it gets filled, then it's great. It's a fishing order way above where the market is quoting, right? And just to see if someone will take it, right? And you just leave it out there for a little while. And what I mean by a little while is maybe it's 5 minutes, maybe it's 10 minutes, right? If someone grabs it, then you're happy. It's no big deal. So you're just trying to put an order that's pretty far out there. Now, of course, watch the market, because if you come over here to the market and you start seeing like craziness happen over here, right? Then that's not going to be a good thing, right? You're going to see, you're going to definitely see challenges in like if the market is starting to drop and you have a butterfly on that's bearish, right? If you were to look at this, right, it's bearish. So if the market starts cratering, then yeah, this credit should go up quite a bit, right? So anyway, so that's your fishing order. Yeah. Um, it's just placing an exit. Oh yeah, someone else answered. Perfect. Thanks, Wayne. Are you in the forum every day? If so, when typically do you start posting? I am not always in the forum. I'll just be straight up honest. When I do check in the forum, typically it's about 10 a.m. Pacific time. So yeah, I'll put on a trade, reef, EG, well, with 30 minutes. Okay, yeah, you guys, it's already beyond. Whoa, hold on a second here. I'll put on a reef at 15 to 30 minutes before the market close, and the next morning it's already beyond max loss. What? But within minutes it's showing a gain, and this back and forth can go on most of the day. At what point do you take off a losing trade? Um, yeah, Tim, that's crazy. I mean, I've been trading this for a very long time, and I don't get over max gains quoted like that at all. Keep in mind the market open gets really nuts. But no matter what, unless it's a crash day, I do not call a loss on a trade until my trade time. I will not exit a trade early for a loss until it's my trade time. As I said earlier, if it's a crash day, you do treat crash days a little bit differently, but it really does have to be a crash day. Like we literally saw a 20% drop in the Nikkei overnight. And, it was looking like we were going to get a 1987 or so. So, you just treat them differently, right? So it's a crash day. Every other normal day, nah, you're not going to see that type of move. Okay. Let me go back to here. So that's those executions. Let me get to the questions that we've got here. Okay. Is it best to execute 30 minutes before the close or 10 minutes before? Execute at whatever trade time you're okay with. Honestly, you'll see there's some times where I'll execute like 3-4 hours before the market close because I've got some meetings or I've got some clients that I'm meeting with or something, or I'm doing something, or maybe I'm hanging out with my son that day, or I'm at the beach, or I'm at my cabin. I mean, who knows, right? It just depends on when it's a good time for you to execute. The results are gonna vary though. I mean, keep that in mind. Like results are gonna vary from my results if you don't execute at the exact time I execute. I made this system to where people should not be trying to follow my exact executions. I haven't done my job good enough yet. I'm finding out that people don't feel comfortable executing this on their own without having to follow me directly. Like I don't have any kind of special secret sauce in my execution or special secret sauce in that I'm going to make better trades than anything else. I use the exact indicator, the exact same trades, the exact setup that I post, everything. I just execute at a specific time pretty much every day, normally sometime around noon Pacific, all the way to, right before the market closes. It just depends. On that note, right, I do want to talk about execution just a little bit. So I'm showing a minute bar here. And the reason why I'm showing a minute bar is you can see, we gapped up today and then we kind of just sold off all day. Really confidence building, right? So anyways, if we are executing a trade, right, and let's just say I've got a butterfly and a call to execute. So I'm just going to use that. Maybe we're using a calendar and a call. Maybe we're using a calendar and a vertical, or maybe we're doing 2 calendars, right? Doesn't matter. Same type of thing. If we're trying to execute this, right, I want to be placing my butterfly, if I've got negative delta on it, while we've got green bars, right? Simple as that. If I am actively moving the butterfly price up while we have green bars. I'm trying to get them to fill it. The market's moving up. The market maker will take your order at a relatively shit-tastic price for them if it's moving against the position, right? No one wants to fill in a butterfly. The great thing about that is we're not just going to leave a butterfly on there. We're going to quickly slam in a call to hedge it. And a call has almost no spread on it, very liquid. Everyone will take it. It's not pure extrinsic value or anything like that. So it's no problem. Even the vertical is like that. So basically, you just want to wait for them to be a green bar. Even if there's a big selling on here and you start see a green tick and you're like, dude, I need to execute and get back to my meeting, or I need something, right? And you see a green tick on here or the market's starting to move up, move that sucker up to, start aggressively moving that butterfly up to mid price every couple seconds. Boom. Okay. Up, up. Where will it fill? You're trying to find the market and then just let the market take it. Perfect. As soon as they take it, turn around and slam that call in, not for a market order, put it in a limit order, and then work it right up to the market immediately, right? Get it filled. So you have literally just seconds that you're exposed to only one side of the structure. That's how I execute if I'm in a hurry. If I'm not in a hurry, that's a totally different story. If I'm not in a hurry and the market is cratering down like this, right? And then the market starts to move up, I will start to push in a butterfly only when I start to get some sort of extreme on the upside, right? We start to get a push, but now you're starting to do like intraday day trading type of execution. You don't need to be that perfect. I'm serious. All of my executions that I post are in my small IRA, and it is literally just grab it and shove it in, right? I've got too many accounts to deal with. It's just not a big deal, right? I've got a family office that I've got to deal with. So it's just not, yeah, who cares? Just grab it, shove it in, right? Get it executed. But like I said, I do break it up like that. I wait for a green bar. I don't care if you're going to sit there in a market crash or whatever. That's not the point, right? Most of these are flat delta when they're coming in. So you sit there and you have, okay, red, red, red. I'm waiting, I'm waiting, I'm waiting, I'm waiting. Okay, boom. We start to get a green right here. Okay, green, 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 green. Okay, shove that butterfly in. Go, pump it, pump it, pump it, pump it. Boom. Then what's really great is by the time I come and get my order, it's possible that the market's actually pushing back down a little bit, and I'll get, maybe $50 or something like that. Woohoo. So, it's just a quick sell. All right. Let me go check you guys. Let me make sure nothing else has come through. Okay, you guys are looking good so far. Okay, moving on to my next question here. Can these strategies be executed in ES future options? Absolutely, they definitely can. Would I recommend it? If you've got some really, really good contract prices, then go for it. But man, the commissions on the SPX versus ES futures can be dramatically different, right? Exchange fees, things like that. So keep that in mind what your commissions are. But if you can get them for good prices, then absolutely ES futures have been there. I have tested it on ES futures, and especially trying to execute something overnight to hedge them and stuff like that. I've done all of that. They work out just fine. Okay. I use Tasty Trade. It looks like 1SD is equivalent to the up and down. This did get answered in the forum. Have I looked at the SD line? It is that blue dotted line. There was a nice video that got posted in the forum. It looks like it's very similar to TOS. I don't personally use Tasty for their platform, so I'm not too familiar with it. So I'm really glad that another member posted something about that. At least in Tasty Trade, I can execute Reef as one trade. Yeah, basically. I think that's probably what we were talking about just there. Okay. How connected are the daily trades? If I skipped a day, how much does that hurt the strategy? Or is it a 5-day rolling trades designed even out at levels? Okay. So each trade is mutually exclusive. So, I mean, if you wanted to, you could come in and just trade, one trade a month if you wanted to. I don't think that'd be extremely valuable. I think it's much more valuable to have them as a rolling campaign. And of course, all of my results are based on that. And all of the testing is based on that. So they do spread out. But absolutely, each trade has their own respective P&L targets, probabilities, everything for that specific day. They are not tied together in any way. They're not reflective of what trade got placed on the previous day. So that is something that is something I'm working on. Would be really nice to do that where it's basically a feedback loop for risk management based on that. But as of right now, no, the system is not built that way. To put the question of the day, where we meant to think, yeah. So anyways, smeared out. Okay, so you can do that. How important is it to hit the standard deviation strikes? Some of the strategies don't have ideal strikes available, especially expirations further out. So there seems to be some subjectivity allowed on how to pick strikes and how much freedom you get. So let's just go back here to O&E, right? There are, on this day, right, you can see there was some super spotty strikes down here. So let's just go through that. So on this day, there's super spotty strikes. There was a couple questions in the forums about this. So I need to get close to ATM, right? That's kind of the point, is I want to be close to ATM. The more volatile the market is, the more buffer zone you have, right? Which is why you saw me switch to a strike filter of 10, right? You switch to a strike filter of 10 when things go really nuts. And you will even see me during COVID, or if we get another COVID, So, like type of crash, you'll see me even use 25-point strikes because at some point in time, it just doesn't make sense to use 5-point strikes. You don't need to be that incremental. It's not that imperative. So at 10-point strikes, here you go. Let me switch it back to I'll switch it back to 5 just so that I can do it. So here's 10 right here. We'll move down here. And I'd like to be as close to the standard deviation mark as possible. Either way, one of these is almost the same amount. So let's just kind of put in a 10 down here, and then we'll throw in a short up here. So you can see here, if I zoom out, this is a broken wing, and that is not what we're looking for. So let's see if we can flatten this out. So here we go. We can't flatten it out, right? This is a perfect example. I can't do anything with this right now. All right, so keep in mind, we're trying to stay near ATM. We're trying to stay near this this one standard deviation mark. It's a crazy day. The market is bouncing around like nuts. It's a 3.5% standard deviation or 3.5 standard deviation day. It's nuts. The exact strikes are going to be kind of off. Sometimes by the time, I know if you're trading, into the millions, you're going to have problems that your at the money is going to move, right? So dealing with those clients, we talk about moving your trade as you go. So setting up multiple trades before you start executing on both sides. So that way you can execute in as the market is moving up or down. So you stay near ATM and you start spreading it across multiple strikes. That's a totally different problem for those types of traders. But either way, you're just trying to stay close to ATM and trying to just kind of stick around where the market is. Sometimes I'll execute in my IRA, and by the time I get to that execution, the market's off of my center strike, right? The market's up, up here or something like that. It just is what it is. I'll execute and move on. It's not this isn't chemistry. This is more like, I don't know, throwing darts or something like that. So you're just trying to get it roughly close, kind of like golf, right? You know your yardage. You're trying to get it pretty close in. You've got the right club, which this is the right club, right? Here we go. This is the structure we want. We just want to get it relatively in the range that we're looking for to set us up for a nice putt, right? So move it up here. Now, of course, we've got 64 delta on here. I'm going with a slightly wider fly, so I'm going to hold more delta on this. Perfectly okay. Just know that in general, on crash days, my preference is to go with a more in the money call. Now that predominantly just comes back to the fact that you're buying less bullish extrinsic value. Not to go into too much into the weeds, but this is kind of my preferred setup. If we're in an extremely low volatility market, and maybe I'm a little bit bearish or something like that, and I have the choice in what's kind of going on here, I will prefer to have a more out of the money call, right? So there's the two on that. Let's see. Any more questions from you guys? Not yet. So we'll go back to these questions. Okay. What advice do you give around how to handle large gaps? For instance, on Monday, 8.5, we had a large gap down, and technically some of the positions should have closed immediately. But the guidelines comments, you say like, okay, so I think I went through this execution day enough of how I handle on large gaps and how to execute those. Like I said, fishing orders, you're only worried about the fly. Don't worry about the call. It's not a big deal. Also, something that I'll kind of point out right here is let's go back to the 5th. This is a very, 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 very common situation that happens on big gap down days. Is that typically we want to try to retrace half of the gap. So if I'm trying to recover from a super meltdown and I know I'm pretty much going to take a loss and I'm willing to accept that, then you want to sit there and go, okay, where is my half point right here? So if we go halfway from the gap, so gap here to all the way to here, so here's the gap, we want somewhere in this range, right? That should be halfway. Yeah, roughly halfway. So there's our point right there. So you can notice that in the day, we rallied. I probably would have tried to get here. If it's a super crash day, it won't actually have the strength to make it up. But eventually we did actually make it up. This actually kind of shocked me that we got up that high. But anyways, somewhere around here is where you want to definitely get your orders in if you have a risk of a lot of positive delta. You'd really want to just fill that in. Also, keep in mind, you have the crash craziness in the morning of crazy prices. That's when you want to try to get those filled if you're getting big, massive profit orders. If you're not and you are taking the loss and it's just beating you up, I just, shut the computer down until later on in the day. And then eventually I'll fill it at my normal trade time, right? That's kind of what I talked about in the forum. Okay, let's go back to this. On the intraday calendar. Oh, yeah. Here's intraday calendar. This is a totally different one. So pricing. Yeah, I'll pull that one out. Okay. What if the account is too small for 10 SPX flies to one? Do we just do it all on the XSP? Uh, the the thing that I want to point out here is that you really do want to do at least one SPX call and then one XSP, or I'm sorry, one SPX butterfly and one XSP call. You want to go to at least that small. If that means that you're not going to be able to slightly change your allocation between 20 and 17% or something like that, that's okay, right? Go, you might be running a little bit hotter, but it's okay. Like that would be fine. Like I'd be okay with that. Of course, I'm not giving financial advice. I want to make sure that that's clear. But in general, like I'm okay with that. Like the small account that you guys have been seeing me pull up, right? Sometimes, like even right now, like let's just show this. This trade right now has what $6,400 in it. We have almost 38,000 in this account right here. So let's just pull this up right now. 3800 times 0.17. Oh, that was pretty spot on. Okay. Bad example. Bad example. Here, let's grab this next day. Here we go. Yeah, 56. So you can see that that's not, the deltas are all messed up, but you can see that that's under allocated right now. And that's because if I was going to try to put on another one of these spreads, it'd push me like way over allocated. We're just trying to get as close as we can to it. It doesn't have to be perfect. There is math behind it, of course, but you just try to get as close as you can. And general rule of thumb is for me, I'd rather over allocate than under allocate so that I can outperform my returns. But I'm okay with taking on that extra risk. If I'm not okay taking on that extra risk, then I'd probably just defer to being slightly under allocated, right? That's okay, right? However you want to skin the cat is okay. All right, let's go through some of the other questions. What do we do? Example calculates 3 SPX flies and 3 long calls ratio is still 10 to 1. That is true, but the delta is not quite 0. Do we adjust the XSP calls? So yes, this is exactly what we do on the, I think I went over this a little bit earlier, but let me just jump over onto that one really quickly here. And I'll turn off these, add simulated trades. Let's just add another one in today. So we'd go hold control, buy here. And then we'll come up here and then we'll say buy. Okay. Let me see. I'm not quite even. That's fine. Let me just kind of stretch this out. That's roughly right. I want to move my shorts back. 2217, almost. Voila. Okay, so here's our flat butterfly. And then let's go grab let's go grab some SPX calls, right? So we'll bring this down into 1, so that way we can show the minimum. So 15, 15. Let's go to XSP. Boom, here's XSP. And let's grab a call here. We're on 14. Our delta on this is 50 delta. Let's grab a 50, 51, 50, 51. We could probably go with either one of these, but let's just go with a... Okay, and then let's bring this down to 1. And voila, here we go. So that's exactly how I do it. I grab the delta. The delta is what matters, right? We're not trying to go for ATM. We're trying to go with the one that makes sense. Now, of course, if I wanted to, have this a little bit more negative delta, then of course let's move this up 1 strike. And now you can see I'm starting to get negative 1.2, right? Moving another strike. Here's negative 3.0. But of course, you're trying to get as close to 0 as possibly can. And that would be, boom, that's the closest to 0. Because if I go up to 22, I'm going to go 1.2. And if I go to that, I'm going to 0.68. So that's our closest to 0. Either way, each one is perfectly fine. There's going to be some variations between trades. No big deal. Okay. Let me make sure. Let me look at the questions here. There's a few things that got posted. Okay. My account is small. I'm using the position reef combined depending on the number of contracts at the strikes, and it's going fantastic for me. Oh, awesome. I'm really glad to hear that, dude. Thanks for posting that, and keep up the good work for sure. Why so many different trades, Mako, Reef, etc., when many of the structures are so similar? Dude, so this is great because this question got asked, and I'm just going to get to this a little ahead of time because it got asked in the chat down here. So each structure, we might think that each structure maybe looks differently, like they're all delta neutral or something like that. But the delta is not the most important Greek. Delta is actually one of the least important Greeks. I know someone's probably going to try to crucify me for that. But for instance, a butterfly and a call relationship right here, just in general, there's extra extrinsic value right here, lower extrinsic value right here relative to that extrinsic value and relative to the probability of the expirations on those options based on my models, right? And then so we can combine these types of structures to get inherent edge in our extrinsic value, but at the same time, we can also use the underlying environment in the macros, in the underlying asset. We can use the volatility across different expirations, right? All sorts of different variables that go into the exact metric that makes up the trade that we're using. The reason why we're doing like a call or a calendar versus a hedged with a call, or maybe a calendar hedged with another calendar, or a calendar hedged with a vertical rather than a call. Totally different plays, right? Completely different areas of where I'm buying and I'm selling extrinsic value. Extrinsic value is everything when dealing with options. Literally, as you can see here, we have on this structure, we have absolutely zero intrinsic value on this setup, right? We have a slightly out of the money call, that's all extrinsic value, and we have a slightly out of the money butterfly structure, which is all extrinsic value also. So we are literally an extrinsic seller at that point. Seller, seller slash buyer, but I mean, we can get into that later, semantics. But in general, that's why we're trying to play where the prices and the options are most effective in the current market environment. So every structure has its own inherent edges, its own inherent weaknesses as well. So like a rope trade, that is a butterfly hedged with a butterfly, right? So, if we, no, uh, trade, and then like, let's just say we move this guy up, or just Just throwing something on here just to kind of show it. So let's just say like this is we need to move this like way further, but it's fine. I'm not going to try to go too crazy. So let's just say we've got a structure like this. Let's say it's a rope structure type of situation. And I realize that this isn't a rope structure because it needs to be at the money. But in general, this is our structure. This is a primary butterfly back here, right? You've got the primary butterfly, and it's hedged with another butterfly. This is actually broken wing, which I wouldn't allow that. But, like I said, I just made it really quick. So there's your structure. So anyways, every structure is different. This is a much tighter structure. It's meant for a market that has dramatically dropping volatility ATM, and relatively expensive options out of the money to the downside, or relatively cheap options to the downside, and then relatively expensive options slightly above the market, right? So we're dealing with just the probabilities and the models that I use to determine options values. So hopefully that, answers it, but it's very important to use different structures. Each structure is very different. Let's see. Because the model they have, because the model they have tells you at the moment which one to use. Yep. That's right. Yes, because of this model. FYI, my execution time is usually between 14 and 14:30 Eastern, so that's probably something earlier. Yes, that's Eastern, so 3 minutes or 3 hours earlier. Yeah, okay. So what are the criteria for strategy selection? That goes back into my proprietary models. Those are not going to be released ever. So that's just one of those things. I totally get it that some people release their methodologies and how they do things. Most of us that do this for a living and work for hedge funds, we keep things very close to the vest, and so that will not be released. But just know that it's a career's worth of work that eventually created this system and is now being offered at a ridiculously inexpensive price. If I was managing money, of course, I would charge a lot more, which might be something in the future that I will deal with. All right. Message retracted. Okay. Wait. Wayne. Won't sometimes the long call be adjusted way ITM to get the delta close to zero? And is that okay? Yeah, absolutely. It totally is okay. If it needs to go all the way to 60, 70, I mean, absolutely do it. Sometimes you'll have a market that is going absolutely insane crazy, right? And I mean, I'm talking um, super crash day. It's everything's melting down. Then boom, it's no big deal. Like just let me pull this into center. Geez. Yeah, it'll put you into a deep in the money call. So no big deal. Alrighty then, let me grab this again. Yeah, it's the way that trade is actually designed. It's designed to deal with the if if the standard deviation model on a um, on a normal Black-Scholes basis is extremely wide, right? And that will, and it's overvalued, right? So basically, what will happen is you'll have a lot of negative delta on your butterfly at that point. Then typically, what will happen is you'll need to have a deep in the money call, and that's predominantly because the extrinsic value above the market is very, very expensive. So you don't typically want to put a lot of risk up there. And so it naturally will adapt itself. No pun intended there. but it'll naturally adapt itself if that day is like that. And the reason being is because my models are, live. They're always constantly updating and telling us what structure to be in. But in order to simplify the system, right, is so that way I'm not sitting there all day long telling everyone exact strikes to be in, and hey, this is exactly what I'm executing, and people have to be like, they got to execute the minute I'm executing, right? Because that would just be total horseshit, and no one's going to be able to follow that. And that's there are lots of trading alert services that do that and everything like that, but how do you fit that in your life, right? How does a working class person try to do that? And that's what inevitably this was designed for, was to help retail traders, because this is where I came from, right? I came from retail trading. And yeah, so anyways, I won't go too deep into the personals, but the point is that I wanted to make this so that everyone can execute whenever it works in their time that it works on that day. Sure, are their results going to be slightly different than mine? Maybe, but everyone that has stuck with this system, and I'm saying everyone that has stuck with this system and learned it and just executed it on a consistent basis, everyone has made money. And some of them have made a lot more money than me. So, congratulations to everyone. I'm very glad that you're doing it. Some of them are using some subjective things in the middle of the day because they've got more time and they're like, oh, yeah, this is a, whatever structure. I mean, you do you, right? Like, you do you. You don't need to do all that stuff to make money, though. And I prove that every day through my executions. So, anyways, I'm not going to go on a rant here, but that's my little soapbox. Okay, nothing else left in the chat, so let me keep going. All right. Okay. I want to look into. Oh yeah, this one got posted in the forum. I just thought this was really great. Right, this was a really great question, because what it ended up going through is it went through the Mako trade, and I posted some pictures up here. And I can probably just super zoom in on this. Let me just zoom in like 200%, so that way you guys can see it too. But basically, they went into my trade specifically on this day. I went a little bit wider than the O&E standard deviation on this day. I want to reiterate, like, I use the O&E beta version, and dude, some weird times show up, like the standard deviation, like, just like isn't right, or it'll just like completely stop working. I've called them. We've talked about this. They are looking into it, all that jazz. But anyway, sometimes the standard deviation will just be freaking out. So what I'll do is I'll go over to Thinkorswim, and then I'll use Thinkorswim standard deviation. And depending on the day, sometimes they can be slightly off, but it's just more important to be just near where the standard deviation marker is. Like I said, we're playing golf from 200 yards out. You're just trying to get the right club for the right day. And what this member did was they grabbed standard deviation, looked like just slightly inside on this one, and the trade result was different, right? My trade was actually up quite a bit of money by the end of this, and then the other trade was only up just slightly amount. Now, by the time this trade closed, I believe it was a slightly different result, but there is a difference on this. You're gonna be able to do that on every trade I do. Especially the calendars, right? Depending on how the market prices in the options beyond that standard deviation marker, they can change. If the market moves very aggressively, the options outside of one standard deviation will actually do a little bit better. So then you'll outperform. But if the market stays calm and in the center here, you're going to get decimated, right? So you want to go a little bit inside one standard deviation. So the sweet spot is at that standard deviation marker for the Black Scholes, and that's kind of that's the porridge is just right? That's kind of where we're going. So yeah, in this situation, it could have been that, but then the knife will cut the other way if the situation was where the market stayed really nice and calm during this trade. And so we don't want to go too far down those weeds. The big key is to just continue to be consistent, execute the trades, and boom. Okay. When I check my Mako trade and toss, analyze Analyze, tap, and extend the date. I do not see any point where I get to 15%. I understand that theta is a garbage Greek. So watch my video on that. Thank you. Yes, theta is a garbage Greek. And that TOS cannot calculate the change in volatility. How do I follow the trade? So I follow the trade just like everyone else does. I put the executions in. On the Mako trades, they do get pretty nutty, right? But if you sit there and you try to do a here we go. We do like a day step, right? If you try to do a day step, and let me just bring this down so that we can get, yeah. So if you try to do a day step like this on calendars, especially when the Mako turns on, you'll see a lot of the time when the Mako turns on, that thing will be negative theta, like crazy, crazy negative theta. If you look at the typical Black-Scholes model on the Mako trade, it looks like it should not work. It looks like it should be a death sentence. And you'll see that day by day, it will click and just make money. Like it has theta, but it really doesn't. So that is because my proprietary options models don't use the Black-Scholes formula. So we're seeing that those options are actually going to decay at a rate that is beneficial and does have theta, but real quote unquote theta that's calculated in TOS or O&E or Tastyworks or all that stuff is total bullshit, and it's not going to work for that. So it's not volatility that makes the Mako work, although we won't complain if volatility is in our favor. And sometimes volatility is just a derivative that makes up for the fact that the theta calculation is incorrect. Yeah, I'll let that sink in because that'll blow some minds out there. But anyways, keep that in mind. Let's see, in the comments, they have to take some time to see. Yeah, yeah. Okay, so just comments there. And then, okay, let's go to more of these questions. This one was we knocked out earlier. Is there any videos where I can see it set up each trade? So I do have some of those trades in the course. If you look on the last two courses, I talk about trading with smaller accounts for the Reef and some of the other ones. I will be re-recording the entire class. I'm not going to say it's anytime soon, but I will be re-recording the class for each individual trade. Until then, hopefully this kind of helps out with some things, and you guys can ask me right now if you want me to set up a specific trade, and I will absolutely do one right here in front of you. So if you want to see that, throw it in the chat, and I will make up a trade right now as it stands. Let's see, how are the trades managed regarding profit and loss? We talked about that. Do you take loss immediately after? Okay, so I want to reiterate this again because I want to make sure that this is very clear because I get asked this a lot. If the trade is below or above max target, right, or below max loss, I do not take the trade unless it's a crash day, right? Very specifically, unless it's a crash day or the last trade day of that trade. So let me break this down very clearly. If I am on, let's just say. Got distracted on the delay down here. Okay. Let's say I'm on the last day of this. Okay, so this was put on the 19th. Okay, if this was put on the 19th, then, or not the 19th, but this was put on the 5th, we are waiting until the 12th. As soon as we get to the 12th, if I am over profit target on that day, anytime during that day on the 12th, I will absolutely execute early, right? So what I do on that then is I'll put out a limit order, right, on a custom trade. Just like I told you guys earlier, I'll put out a limit order at my profit target. And if it fills while I'm, doing whatever that day, then it'll execute and voila. If it doesn't, right, then I'll execute at normal time and I'll just exit for whatever the trade ends up being. That is not the same as a loss. If it's at a loss on the 12th, I will wait until my trade time and execute at the end of the day or in the last hour of the day, which is when my trading time normally is. If I move it that day or if I exit out a little bit early, typically I'll post that in the forum. Not always, but most of the time I will. How much longer do you think we'll be doing reef trades before switching to a different trade type? It's completely up to the market right now. So just to be very, very clear, the reef trade or the reef structure is the most abundant structure that we have. So there's more reef environments than any other environment that we have. I know that that doesn't look like that if you look over the last 2 years, but the last 2 years are, somewhat anomalistic, but in general, we will be in reef trades more often than not. But you'll see that the allocation on the reef trade and the profit and loss targets on the reef trade will dramatically shift from environment to environment depending on how much edge there is. And of course, I say that edge depending on how much extrinsic value we're able to sell versus how expensive the extrinsic value on the call is that we're having to buy, the balance of those, and how the probability is set up for that. So very important to know that that's what changes. Okay. So how much longer? Yeah, I mean, who knows? Uh, if we go back into an options pricing structure that was similar to, let's say, mid last year or even, just a couple months ago, then most likely we're going to end up shifting into, I would just say most likely we'd shift up into maybe even a deep C. But I'm never quite sure, right? It really does depend on how the options end up pricing in things. We do have a quote unquote, recession being priced in. That's total bullshit right now. The options are 100% not pricing in a recession. They're very, very different. Yeah, I mean, the bond market did price in a recession for like 4 days, and then now it's going out. So who knows? But yeah, options wise, it's not like that. Are you recording this session and will it be available to view at a later date? I am recording this. It's being recorded via YouTube, but then I'll also pull it off of that. I'll probably download it and then I'll probably chop it up. And so we'll get little bits of pieces here or there. And then I'll eventually release those to maybe members only or something like that. And right now, everyone can see everything because it's live to anyone that wants to attend right now. Okay. Let's go through the rest of these questions, and I do want to wrap up here soon. I wasn't meant to take this long. Oh, actually, we're actually almost up with questions. Okay. Yeah. How do these trades make money if not from traditional theta decay? I think I've kind of gone through that a decent amount. It's more about the balance of risk. It's more about the balance of how the options are priced, right? So here's your OTM probability, right? You can see that what this does is you can see your, in general across here, you can see, let's see, where's 68? So you can see right here, one standard deviation on probability of OTM is roughly speaking, 50, 48 or so, right? And you can see that this comes down to this like crazy point, right? And then you can kind of come up here and the call side and the put side are slightly different, right? So this is the standard model of probability of OTM. Now, TOS adds a little bit of like secret sauce to it to say that, you've got a little bit of a bias to the upside or the downside, depending on, whatever recent stuff. So keep that in mind that that changes around. But in general, right, this is the probability of OTM, and then you've got the volatility, which is the implied volatility of the option. You combine both of those as two variables, and you'll get a relative price of the option And if one of those are off, let's say the implied volatility is really sky high, the implied volatility might be very high because that option is relatively expensive versus its probability of being OTM. And so the extrinsic value on it is relatively overpriced. Um, it doesn't mean that it's a good option to buy, right? It just means that its probability might be slightly lower. Okay. In session, blah, blah. Yes, yes, yes. Okay. I think, yeah. So those are in general all the trades that, or all the questions that got sent to me. You guys have asked great questions along the way. I will give you guys just a minute here to send out anything else, and then I will be shutting this call down. So if you guys have any questions to ask me right here live, it's your time. Hit me up now. I'm really glad that everyone is doing well. Of course, remember, you can always reach out to me in the forum, ask any questions that you want in there. I'll post things like that. I'll post my trades. I'm very transparent on everything. I really do just want everyone to make some good money and not have to stress about, execution problems or, did you hold your mouth just right and stand on one foot while you did this, and that's why you didn't make money or whatnot and so forth. I mean, there's a lot of garbage out there, and I really do want to cut through all of that garbage and just be able to provide a strategy that does well for everyone while you guys have access to it, and you can make money. Really, I mean, that's how it is. We'll just prove month over month over month that you can make money as long as you're consistent with it. So, all right, guys, I'll see you guys on the forum and in the service.